Welcome to Trading the Close on this Thursday. I'm Toni Valliere with Verified Investing, and here's what's making headlines today. Home Depot is acquiring SRS Distribution in an $18.25 billion deal. FTX co-founder Sam Bankman-Fried gets 25 years after being convicted of defrauding his customers, investors, and lenders. It's one of the longest sentences for financial fraud. Estee Lauder stock jumps on an analyst upgrade. 30-year fixed mortgage rates tick down 8 basis points from the previous week to 6.79%. Meanwhile, pending home sales ticked up in February, rising 1.6% from the previous month. That's according to the National Association of Realtors. Let's get a check now of where things stand just minutes before the closing bell on this Thursday. We're seeing the Dow up just 52 points right now, 0.14%. The NASDAQ actually down 3 points, 0.02%, and the S&P 500 also just slightly up 5 points, 0.10%. We've got oil up over $1. We've got gold up over $26, and then Bitcoin up over $1,400 at this time. Let's bring in Chief Market Strategist Gareth Soloway with a recap of today's trading. It is a spring break. It's probably light trading, light volume right now.
It is really light. So I think the big players mostly left already. It's the end of the quarter, end of the month, and obviously the holiday weekend here for the stock market at least. And
They're all in Italy enjoying some wine and pizza.
Yeah, exactly.
Okay.
So, and essentially what we had is this was yesterday, right? So we had this late day surge yesterday, and then look at the market for 90% of the day, how tight of a light volume consolidation it was. And then you got a little bit of blips. This is probably end of the month kind of rotating in, out, maneuvering positions that happens just, again, normal quarter end type of stuff. But overall, at least for the S&P, it was really quiet. Now, we did have some stocks that were in motion today. We can talk a little bit about RH with a nice pop right here. Again, I'm not necessarily sure if this was specific to the company, but I do know Home Depot bought out something that was similar. Yeah, and therefore, a lot of times this is called a sympathy play, where something that people start to extrapolate and say, well, if Home Depot bought these guys, maybe Lowe's would buy RH, or something like that. And it's a way to just kind of figure out why a stock is getting a bid, because something got bought out for a premium that's very similar. So nice move there. Other stocks we talked about. Estee Lauder just before the stream started here. That one's getting a little bit of a move. Interesting little chart here, right? So if we look at this, the first thing my eye comes to is this low, and this low. But it looks almost like it's identically lined up, right?
Yes.
And so what we'll do is let's play around with this. So we're going to take a trend line and run it up underneath, and there you have it. And we can run this trend line right to these highs. And essentially what this creates is this channel, this parallel channel. And what it tells us again is that, sure, you'll have a little bit of resistance right here. It's just a pivot top where you came up and came down, but Estee Lauder is possibly able to trade up to that level there, but that would be resistance. Again, very clear. Every time it gets there, you get these big pullbacks. So again, nice little move on Estee Lauder today, but again, it likely, if it got up to that 170-ish area, would have a lot of resistance there.
Okay, I want to mention some of the other market movers. AMC, MillerKnoll, Palantir, and Braze. But the last 3 days, I've had the same big market mover as part of this Trump media.
Right.
What's going on with this? This just went public as far as Trump media goes, the ticker symbol DJT,
right,
as they merged.
So I think part of this is that this is now the new favored meme coin, right? So, or the meme stock. It used to be GameStop, AMC, crazy runs. Now everyone's kind of focusing in on this, which is interesting because it creates these gap ups every day. Let's take a look at the chart, because I do think there's something that investors should be aware of. So what you're seeing here is, again, this was incredible. From $36 over the last 4 days, it topped out around 80. It's come back to 62. But one of the things that's striking to me is look at the colors of these candles. Every day it's red, meaning that it opened up higher, and by the end of the day, it sold off. The only reason that's happening is that big players are unloading into this. So just a warning, this is something that catches my eye. It basically tells me you have the meme traders, the retail crowd, buying this up, bidding this up, and then the big money is likely coming in and selling into it. And generally what that means is eventually when the meme buyers run out, price will come back down. Now, again, it'll have some support right here around $48, but I just want people to be aware is, you know, again, it's not that this stock, I couldn't care less what the stock is, it's just the pattern formation sends red signals to me that something is going on, that bigger money is unloading into these buyers. So investors just have to be aware of that. Is it possible for the smaller investors to overcompensate and eventually drive it up? Yes, we saw that with GameStop a few years ago. But again, just be aware you're fighting a battle against institutions here.
Explain meme for anybody who's watching and is not sure exactly what that means.
It's just a kind of a term where people, it's a stock that maybe everyone kind of jumps online with and gets excited about and hype it up.
Okay.
And it just runs. It doesn't necessarily have the fundamental factors like earnings, right? It doesn't make a lot of money.
Not a great foundation.
Right. It's more just hype that just drives everyone into that, trying to make, honestly, an easy buck. Hoping to basically drive it up and sell it for 2x, 3x of what they paid. But that, again, is the classic case of what happened to GameStop and AMC, and we see what those stocks have done. They've come way back down.
All right. Anything else you want to touch on? Do we want to go to Bitcoin?
I was going to say, I think if people will be upset if we don't just briefly touch on Bitcoin and even gold. I do think we should just quickly touch on gold because it's having a good move. So Bitcoin inching up just a little bit here. The only things to watch, so number one, we have the end of month and the end of quarter close on the chart for Bitcoin. So 69.2 is approximately my level. Come Sunday night, I'm watching that like a hawk. Do we close above? Do we close below? Right now we're above. If it holds here, that would be very bullish next week for Bitcoin. The only other thing on the bearish side, looking at both sides, this trend line, I've talked about it before. As long as price stays above, it has favoring to the upside. If it breaks below here, that's where you would get worried. But aside from that, I mean, even this is kind of bullish consolidation. It might be headed higher next week. And again, we're talking about taking out 74, maybe even heading to 80, if it's able to hold and have that weekly and monthly and quarterly close on Sunday night. And then lastly, real quick here, let's just go to gold so that the gold bugs don't feel left out. We do have gold having a rock star day again. We can see bullish consolidation on the daily chart. We know it's already broken out from that long back to 2020 high level here. And to be honest, I think the fact that gold is doing so well is a warning sign. I'm taking it as a warning sign that the underbelly of the economy is probably not as good as what everyone thinks. And you have a disparity. Stock markets at all-time highs, gold at all-time highs. That is not normal. It tells you that one is right, one is not right. Which one is it going to be?
We will find out eventually, no doubt. And I know you've stuck with this. You have not wavered.
That's right. I'm still bullish on gold.
All right. Thank you very much, Gareth. I appreciate it very much. And remember, you can catch Gareth navigate the charts in real time every weekday morning at 9 a.m. on his show, The Game Plan. That's right here on the Verified Investing YouTube channel. I know tomorrow's a holiday. It's Good Friday. A lot of you are off. There will still be an abbreviated game plan. So tune in for that, 9 a.m. All right. My other special guest is Elisa Covington, a real estate investor, published author, and coach in the San Francisco Bay Area. Elisa, welcome to Trading the Close. Thank you so much for joining me live from the West Coast. I know it's about 1 in the afternoon your time, right?
Yes. Thank you so much for having me, Toni.
Oh, it is so awesome to have you. I told you it's selfish reasons. I'm very interested in what you do. I'm very impressed by you. You have a very impressive YouTube channel with incredible content. You're teaching people how to do what you do, and you're self-taught. Is that correct?
Kind of. So I was learning as I go, but I did have a mentor.
Well, that's probably the best way. You learn from your mistakes along the way, and now you're teaching others. Let's first touch on the real estate market. How would you describe the state of the market right now?
It's kind of an interesting market because interest rates are very high, so demand is definitely hurting. And it's because the affordability is at historical low. So that usually means prices would go down, which we saw in 2022 when interest rates started to climb. But the market didn't crash like a lot of people predicted. It's because while the demand is lower, the supply is also lower because there's actually a lock-in effect due to higher interest rate. A lot of homeowners are less compelled to sell their homes because when they sell their houses, they have to trade for another home at 2-3 times higher the interest rate that they're paying right now. So because of the both lower supply and demand, prices actually have been holding pretty steadily. since the beginning of 2023. So we are seeing the prices are holding steady, and in the beginning of this year, there's actually a lot of pent-up demand from the last couple of years. And a lot of buyers become active again because they realize that the interest rate might go down soon as the Fed is going to adjust the rate, and they are worried about more competition coming in when the interest rates actually go down. So I've sold 5 homes since the beginning of this year, and we're seeing hundreds of buyers swarming open houses and a lot of preemptive offers that are hundreds of thousands of dollars above the asking price.
Wow.
So that's signaling a market that's actually heating up, and a lot of buyers are very eager and they don't want to sit on the sidelines anymore.
I believe that 1,000%. I'm actually a California native. I just left there a few years ago. I know exactly what that market is like. I know it's not that way everywhere completely, but where do you see it headed this year as far as housing prices go? Will that continue? And with mortgage rates, where do you see those headed? Do you see them going down to a rate that is affordable for most people, especially first-time buyers?
So there are a lot of predictions going around in terms of what the Fed is going to do. So most people believe that there will be 3/4 point cuts for the rest of the year, and some people think maybe only one cut. It all depends on what the inflation data is going to look. So the inflation rate really needs to make more progress towards a target 2% for the Fed to feel more comfortable cutting rates. So we don't know how quickly the interest rates will lower, but probably they will go down this year. So that will definitely be good news for the housing market because the buyers will have more purchase power, and the affordability will go up, and the sellers will be able to see more demand. So it's good news for both buyers and sellers. In my opinion, based on the pent-up demand we have from the last couple of years, I do feel like the prices will likely go up the rest of this year at least, just because interest rates are heading down and we have so much pent-up demand.
Well, for someone looking to invest in real estate, what advice do you have? Is now a good time to get started? As you mentioned, interest rates right now are still fairly high.
I get this question all the time. So I constantly tell people that there's no right time to invest in real estate. Anytime is the right time because it's not about where the market is. It's really about whether you are ready to start investing. Like a lot of beginners want to time the market, they want to wait it out and jump in only when the market is right. But nobody has a crystal ball, and we can do a lot of predictions, but the market will perform its own way and a lot of times unexpectedly. So there could be a war or a pandemic breaking out tomorrow and completely change everything. So my advice to beginners is really to get your finance ready and be prepared mentally and educate yourself as much as you can and jump in when you feel like you are ready rather than waiting for the right time. Because when you think it's the right time, the time actually has already passed.
Yeah, no, I get that. I relate it to like with kids. There's no like perfect time. It's like just go for
Exactly.
it, right? No matter what, it's going to be a juggling act and crazy, but awesome. So do you actually have your real estate license? Is that something you would recommend for investors to be able to negotiate their own, deals?
I've never actually had a license. So the my business model is to work with real estate agents to rely on their expertise. So they bring opportunities to me and I purchase the properties with them. And then after I do work on the properties and add value, I will resell the properties with the same agents. So they are incentivized to work with me. And also, I don't have to also be a good agent myself. So I can rely on their expertise.
No, that makes sense. Let's talk about doing the actual investment. We hear all the time that you don't actually have to have much money or any money to invest in real estate. How is that possible?
That's the beauty of real estate investing. Unlike investing in the stock market or crypto, you can actually leverage other people's money when you invest, and you use other people's money to make profits, and you can keep the profits yourself. So I think that's really why people love real estate investing so much, and that's why I love it so much. So you can use conventional mortgage to invest. You can use hard money loans to invest, which is designed to help fix and flip investors. And there are also a lot of private money all around waiting to jump into the real estate market because they see real estate investing as a safer investment, and they really like how less volatile it is compared to the stock market, compared to crypto. So really, when you have a good deal, so beginners should focus on finding the right deal. And when you have it, really, there's a lot of resources you can use and a lot of money waiting to invest with you.
How do you find those people?
They are actually everywhere. So you can start from your friends and family, but there are a lot of real estate meetings happening all the time. And you go to those meetings and you can connect with those people. I actually was able to fund a few of my deals when I was starting out, and I didn't have enough resources myself. So I was able to borrow money from complete strangers. Like I just told them about my deals, about the numbers, and they were more than happy to invest with me so that they can get a good return, and also they feel safe about their investments.
So what led you to start investing in real estate, and how did you first get started? Because you had a whole other career before this.
Yeah, I was working 9 to 5 at a tech company. So I got started. I really stumbled upon it. I purchased my first home back in 2012 when the market was kind of at the rock bottom. I bought a condo that was a short sale with a pending litigation in San Francisco. And because of the pending litigation, I was able to purchase the house at below market value. So I was lucky. And also the house needed a lot of work. To give you an example, in the kitchen, the sink cutout was bigger than the sink. So there was a gap all around and water could seep through into the cabinets. And I had to do some repairs, even though I had very limited funds after purchasing the home. So I think I spent maybe $20,000 to do some minor repairs. And then after just a year, the value of the home really appreciated a lot because of the because the litigation was resolved, because of the remodel, and also because of the real estate market kind of getting out of the rock bottom. So I saw how powerful real estate investing is, like the power of real estate in general. So I actually borrowed a HELOC from the equity I had in my first home to purchase my first rental property, which was also a fixer-upper, and I had to do a remodel on it. So from these two remodels, I really enjoyed the process of transforming a rundown home into a dream home and adding value at the same time. So that's how I decided to jump into this career and really transform neighborhoods one home at a time.
Oh, so amazing. Real quickly, how many homes have you flipped so far?
Over 60.
Over 60. Tell me just a couple of mistakes that you've made along the way that you've learned from.
I think the biggest mistake we actually touched on is not getting into the business as early as I could. I actually was waiting on the sidelines like a lot of beginners do. So I was ready to, I was interested in investing, but I was um, worried about the market, worried about the timing. So I didn't start investing right away, but I was just like trying to learn about it and trying to figure out where the market was. And then I wasted almost a whole year. So that was the biggest regret in my career that I didn't go into it as early as I could. So that was the first one. And then the second one is I actually didn't make this mistake myself. As I mentioned, I had a mentor when I got started, which I feel in like incredibly grateful for because my mentor really saved me from my first deal. But I see a lot of beginners really jump into the business without knowing about it very well and without any guidance. And it's pretty risky. Like when you do it that way, you can lose a lot of money, and it's really not the best way to get started in something new and something that has a steep learning curve. So my advice to beginners is really to find a mentor before you get started.
You've inspired me. This is something I've wanted to do for years, but it is a little terrifying. I know there are risks, but you have also made it a career to teach others. What made you want to do that?
So as I mentioned, I realized the power of real estate and it completely changed my life. I went from working a 9 to 5 job, making a low six-figure salary to becoming my own boss and having complete control of my own schedule and making a multiple seven-figure income in just a couple of years. So I really want to help more people to also be able to transform their lives like I did, especially women. I want to educate more women to take advantage of the power of real estate investing and to be able to have a career while raising kids and also to use the money that the wealth that they create to take care of their family, of course, but then also to use the wealth to make the world a better place.
I love it. I love everything about your mission. I know I want to learn more from you. I'm sure many of our viewers do as well. Where can they go to learn more about yourself and your services?
Sure. So I have a YouTube channel where I teach people how to invest in real estate, and I also showcase the before and after of my flips. And I have a book. It's called Flipping Houses Quick Start Guide. It's for sale on Amazon, and I also coach students to get started in real estate investing. And I have a coaching program called Transform Flipper Academy. So these are the resources that people can use and can also follow along my journey.
Yeah, and I know it keeps going. The sky's the limit for you, my friend. You keep it so simple and straightforward, and that's what someone like myself really needs. So, Elisa, thank you so much for your time, your perspective, and really educating us on the market right now and how to get into investing in real estate. Thank you.
Thank you so much.
Thank you. Wish you all the best. And thank you for watching Trading the Close on this Thursday. We're back next week. We will see you here on Monday, so make it a great rest of the week.